All right, let's jump into things. On Tuesday, RBA Tuesday, we are 8th of the 7th. It's 20 past 10. So look, as I said on the weekend and that, there's not really sort of a great deal of sort of news happening this week, and that is RBA is the sort of main attraction pretty much, and obviously subsequent sort of press conference after that as well. But short of that, we haven't really sort of got a great deal sort of coming up through the way. We've got Fed minutes and that, normal sort of unemployment claims, but no real sort of major sort of catalysts in that. So, excuse me. Well, apart from the RBA today, which is pretty heavily sort of telegraphed, I think I sort of saw something as much as sort of 95% before sort of, expected. And look, that it's a fair call with that. And look, I think it could actually sort of come in. It will be the sort of first back-to-back sort of rate cuts we've had since 2020. So people are sort of talking about this kind of thing with it all. But if you look at the numbers, unemployment sort of anchored in the low sort of 4%. CPI is down into its band, which, they've always sort of said that, like, 2% is the target, 2 to 3% is the kind of band which they started to make a sort of an acceptable level when things were, 6 or 7% or so, which made it a little bit more sort of realistic and obviously achievable. And not only that, the last print came down faster than expected, so we dropped off more than we sort of the market had been sort of anticipating. So look, on those sort of fronts and that, you could sort of say, hey, look, a cut could be warranted. We had a pretty bad sort of little sort of trade deficit the other day as well. Not that that's going to be right up there, but it is, of course, something you've got to plug in and you've got to sort of take into account as well. So, I think it is highly expected, and think it's quite probable that we will get the cut. So in saying that, sort of press conference is obviously going to be a little bit more of an insight for us to sort of see what the RBA sort of outlook is sort of moving forward through to the end of the year, because we have been sort of pretty much expecting seven. I think, well, I say we, the talk of the town seems to be 75% base point cuts through to the end of 2025. That's actually only sort of, well, we're in the second half of the year now, so 5, 6 months away. So that's two more cuts potentially if they do stick to that kind of that sort of plan. And of course, these things can always change, but the point of it is, to trade around the idea about what the market is expecting, and thus in turn, in theory, should be sort of positioning themselves for. But as I always sort of say, look, Aussie can have any sort of data it likes, it can position itself, and we've been seeing this. I mean, there's been the idea of cuts, excuse me, sort of coming, but even with that, US dollar has just been so incredibly weak that it doesn't really matter what's happening on the home front. And the same rings true for, moving forward through to the end of the year. Sort of like, even if they have a little bit more of a sort of wait and see approach, if the market starts to buy up US dollar, it's still going to see some downside risks with Aussie. So, we can have sort of, hawkish dovish kind of outlook, but to me, it's kind of more just sort of like it's either like I'm trying the best way to describe it, but like a multiplier or a sort of a retarder of what the impact of the US dollar action more broadly against the market would be. So, meaning that if they're buying US dollar and we're sort of hawkish, well, that's fine. They're buying US dollar, so Aussie will be going down. If we're hawkish, it just won't go down as much, but it will still go down. Like the precedent sort of comes for the strength of what's happening with sort of US dollar, and then subsequent to that is what we're doing with our local data. So look, that's pretty much it for news, and that wasn't really a great deal overnight. Nothing really too exciting. We had a bit of Japanese data out early this morning. A little bit of a gap down. I should sort of say actually, sort of, although we haven't got a great deal of actual data sort of coming out this week, we do have a lot of this talk of the tariff stuff, and so the tariff deadline was to be tomorrow. I've got to look into it a little bit more, but from what I've seen now, that seems to have been pushed back, where I think it's 3 weeks, so 1st of August, which is fine because that's a couple of days after I get back from Hawaii. So that'll be something to come back to. Also have CPI, I think, around that day as well, US CPI. So is it? Aussie. I don't know. There's something coming up around that sort of end of the month over there. Maybe the rate decision. Actually, no, it's the rate decision at the end of the month. Aussie CPI. I think that's how it works. Anyway, point being is at the moment the tariff talk is back on the table. And we saw with that sort of, leading into this, before that sort of headline came out, gold catch a bit of a bid, sort of moving back up. And obviously, so US dollar's been doing okay. So now that that's sort of been pushed back a little bit, we might sort of see a little bit of that cooling off of gold. So we'll see and have a quick look over the charts and sort of see what we can sort of pick out with it all. Look, we might as well just start with Aussie just while we're doing this here because obviously RBA coming up today. Look, technically it's trading very well. If you looked at the video analysis from the weekend, it was this other Aussie chart here, and if we put it on the daily, you can see this sort of very sort of common sort of hanging man. And I know I mentioned this on the weekend. You got three hanging men in a row, bang bang, and we got slammed down yesterday. I think it was a fairly decent little drop off, wasn't it? So have a look at this. Where are we down? Sort of over 1%, 1.2% down yesterday. So, obviously, people sort of positioning themselves a little bit for the idea that we're probably going to get that rate cut. But again, I don't think that's the main sort of driver with it all because, it's not just like, oh, they just realized over the weekend that they're going to be cutting. It's been talk of the town talk of the town in RBA circles that we're going to be cutting for quite some time. And even with these big dips down here to weekly supports, we saw big pushes back up to the top side here as well. So, it's not sort of like, oh, okay, they're going to cut, so we drop down here. No, this push here came from the fact that we got a drive up on DXY, US dollar across the market, which was kind of like a delayed fuse from the NFP, which I'll get to when I sort of cover DXY. But if we jump back onto this other Aussie chart, it's a little bit cleaner, and we can see that, it's respecting the levels very well. I mean, it's come down here, it's held its support. This is what I was sort of saying. I put these little marks on here because 60s, 90s, I say, and really, I should be honest, in their 20s as well do play their part as well. But for now, just so the chart doesn't get too sort of too choppy and messy, just put the 60s and 90s on there. You'll always get some sort of reaction through the 60s and 90s. Doesn't mean it's going to be a base and you go all the way back up. No, but whether you're coming down into it, whether you're going up into it, most of the time you're going to see these kind of reactions where it sort of holds and they're little turnaround points, as you can see quite a few times here. Well, maybe not down this one here, didn't quite get down there, did it? But the hit ratio of sort of counter trading through these zones is good for 20 points at least, most of the time. So anyway, what we're sort of finding here, get down onto a tradable level. We got 4-hour supports coming through here. We broke that sort of little channel that it was working into. It's come down the bottom. It's just consolidating the bottom of this drop here. To me, what this is sort of like, okay, you got the buyers sort of obviously sort of stepping in here. Let's pinpoint these ones. This is going to be crucial for them to hold because what you've seen is, okay, you've come down here. This is an area that we've seen buyers previously. So that's fine. That's what makes it our support. They're holding it. It's consolidating down the bottom here. If we see an absence of buyers here, that's a pretty straight shot down. Subs 64. You know what I mean? Like, yes, you've got these kind of levels here, and I just harped on about the 60s and all this kind of stuff here, and it is a little bit of a sort of point you can see, and this emphasizes the point very well, that the 60s and 90s, you can see how many times it's held it, gets up above it. Well, now we're up to the top side of it. So you could see some sort of little reaction down through here. Again, it really just depends what they're going to do with the US dollar. I think we do have some more sort of short-term upside with the US dollar. So I do think that this is going to crack and sort of come down to the bottom side here. But again, let's see what they say with the RBA. But should we break through this sort of 64.80s, you might get a bit of a reaction around here. I mean, if you chuck a fib over this move from the lows down over here, we can sort of say, look, coming around these 50s, 50-60s area, you got the 61%. It may hold. You take out this level, you take out 61%. I think that's going to be your confirmation. And really, you're coming down into the 90s down over here. In my opinion, that's the direction I'm going to be sort of trading this thing. So if we come down through this zone here, I'm already short from the top side over here. It's been an absolute headache in that, sort of particularly with these dips and dips and dips over here. But, that's the point that, they'll try and sort of burn you out. And this is what I sort of say that, a lot of this sort of price action like this is something typically I've seen more of oil, like, in times past. But it's the kind of idea that, okay, fundamentally they're cutting, so it should be dropping. So what does it do? Drops and moves back up. Drops, move back up. Drops, move back up. Drops, move back up. And this is what I'm saying, that sort of like these kind of moves here, they're designed in that basically in the sense of, I mean, again, look, US dollar's been incredibly weak, but the idea is that, it's going to burn you out mentally time and time again, burn you out financially. It's like, you know what I mean? If you're like, oh, here we go, we've got the lower low, here's my stop, boom, I'm out. Okay, here's a lower low, boom, boom, I'm out. You know what I mean? It tires people out. They get to the point they're like, whatever, look, I'm going to move on. I'm going to trade something else. I'm going to sit on the sideline. I can't do it. Been hit 3 or 4 times in a row. Maybe shorts through these areas here, and then goes all the way back up over here. Like these kind of things, it burns people out mentally, and also if they're taking the little stops financially as well. So eventually they break down, and that's when you sort of see them run. So I think it's a nice little box that it's sort of consolidating down. The lows over here, it's come in, it's found support where we expect it to. But the thing is, the fact that, as you can see, it tried to come down, moved up, bounced, tried to come down, bounced. It's showing that obviously it's confirming the more touches into here, the more times it holds, it's confirming this support line a lot more. Once this breaks, it's going to be a significant break of that level. It's not like, oh, I touched it once and then dribbled through. No, it's sort of like it's held, it's held, it's held, it's held. So it means people are buying this, people are buying this, people are buying this. Where you're going to put your stops, you're going to put the stops just underneath. That's why if you break this, you're going to see the positions, the new positions that tried to buy this bounce as it came back down into here for the idea that, hey, look, we buy the dips. And buy the dip has been, look at how good buy the dip has been. Buy the dip's been great. But eventually buy the dip's not going to work, and it's going to go and it's going to dribble down there. And what you're going to find is the people that buy this pullback here are going to put their stops underneath here, and that's going to feed a move that's going to be coming back down to the bottom side over here. So look, we could see a little bit of a push up in that, maybe sort of a retest of these underside levels around that sort of 65.30. Yeah, 65.30. I would be surprised if it gets up to 65.40. I might be sort of questioning it a little bit, but we'll see how we go. I mean, turn around Tuesday, see how much this thing wants to bounce, see what they want to do with the US dollar. But if this thing sort of bounces up over here, I think there's a high likelihood that's just a little bit of a relief rally, and then we move back down to the bottom side here. So confirmations for this are underneath 64.80. And then underneath 64, call it 64.50. Give yourself a little bit of extra sort of leeway underneath this level here. I'll just chuck an alert here as well. Breaking 61%. Targeting 60, let's say 64, 63.90. And we can reassess sort of what the market's wanting to do should that sort of play out down there. All right, move forward. We've sort of got, may as well jump onto DXY because we are seeing this thing sort of bounce up a little bit. So respecting the chart very well, and this is the moves that I do appreciate with these markets. That if you are sort of, obviously it's been so ugly sell down here. This sell down here is an example of when they're not respecting it, because the idea with these things is you have your support, breaks the support, comes up, retests here, comes back down, makes a new, targets the lows, comes down, makes a new low, comes up, retests. You haven't seen any of this. It's just sort of bail out, bail out, bail out. There's no retests, there's gaps that have been left, and that to me that's more emotional trading. People are just get out no matter what, get out no matter what. I mean, this whole sort of drop down here started from when that Bowman chick said, "Hey, look, well, they might cut in. They might be ready to cut in July," which that was off the back of that Mueller guy saying it the Friday prior. I think this was on the Monday. Yeah, so as you can see, drop downs on the Monday. Mueller or something, whatever, was saying the same thing, which are both sort of typically, given their past comments, more hawkish, but both of them went a bit more dovish. There was a whole bunch of sort of speculation around that sort of point of, are they sort of trying to position themselves to get on Trump's good side for when Powell finally moves on in May? I don't know. There's a lot of that sort of talk. Whether that's true or not, who knows? But certainly the reaction of the market was what sort of kicked it off here. It did come from that very sort of vital. This was the weekly flip point, as you can see, and I was touting 99.4, 99.4. Yeah, it gets up there, 99.42, and boom, absolutely hammered down from there. So look, as a broad sense, we are sort of kind of shoring up this channel here a little bit. We do have this little sort of relief sort of channel that is moving through at the moment. We are sort of, and what I sort of say about this is, in a roundabout way, is that we are respecting the levels because, as you can see, this is your support. Whoops, this is your support levels. It's come up and tested the underside. Beautiful. Where's it come back to? Well, it comes back to the breakout of this channel. Broke out, retest the breakout level, held there, moves back up, carves through this level. I was surprised it actually went through it so quickly, but moved through it so quickly. That was the NFP. Rocket candle up here. Where did sellers come in? Sellers came in exactly where we expected them to. If you look at the chart that I put up prior to it, that's where the arrow was because this is where we expected the sellers to come in based on previously where they had. Bang, push back down. That's fine. Ignore the sort of, I mean, look, come back here with a swing, whatever. I actually thought it might have held a little bit more here, but of course, ignore this part because this is 4th of July holiday. As soon as they're back at the desks, bang, we move up to the top side there. And this is what I was saying in regards to sort of Aussie as well. Like, it's nice to sort of think that, people were sort of positioning for the RBA, waiting up until the very last minute, or like the day before to do it. But really, you could see the market was saying, hey, look, let's buy up some US dollar. And where did it go up to? Well, it came up, retested the underside of this support, and also closed that first gap. And this is the whole idea with gap theory. And I said this at the time that, let's get that here for now. I said this at the time that these gaps with DXY will either close straight away and they move on. They'll either try and close in Europe. If they don't close in Europe, it could take 2 weeks. And what's this, 24th? I think we're at 2 weeks now for this one. Obviously, we haven't closed this yet. And a week and a bit, pretty much to almost 2 weeks for this one here as well. That's on the Thursday, so just under 2 weeks here. So you know what I mean? Like, that's what I've sort of found with these things. But 90, I'd even say 99 out of 100, not even 9 out of 10, 99 out of 100 gaps close with DXY within a couple of weeks at absolute maximum. I've only really sort of seen one that we left ages ago. This is sort of a little bit of travel back in time sort of thing here, but where was it? It was like a gap from over here. It was a gap from over here. Jeez, I can't find it in a split second's notice, but it was something sort of like through like this period over here, and then we came all the way up and then sort of closed it. Maybe it's this June's drop down here. No, I can't see anything on the chart here. Anyway, the point being is that we closed the gap. So I've kind of lost my train of thought. Lost my train of thought here. We left a gap very high, and it took a couple of months, and then came up and closed it, and then moved on, kind of thing. Anyway, beside the point. Back down onto something that's actually actionable. So we're seeing a little bit of a sort of gap down here. So I think this would probably be attributed, maybe possibly to that sort of kick the can down the road with the tariff talk. So basically, it's only a 3-week stay. But, we've hit a sort of technical level where we expect the sellers to come in and close the gap. Once you close the gap, that's fine. It's a target. Sells back. Beautiful. It's left a little gap this morning. Same sort of thing. We sort of see, are they going to sort of dribble this back down here a little bit more? There's a high possibility because we've got to remember we are still in a very, very sour, negative downtrend kind of thing. Just because we've got a little relief rally for a day or two doesn't mean that this is all forgotten about. But it does sort of mean that there is still a chance that we continue our little forward momentum up towards this sort of falling resistance and possibly target this next little gap over here. So I think should we sort of get a little move back up over here? Let's put it up around change this one because that was obviously a downside. So breaking zone, target, gap fill number 2. So should we sort of get a good push above this zone over here? I'm not putting it just a centimeter above the wick that we saw over here. I want to see it back above, clearly back above this zone. So above 97.7 and 7, 97.78, whatever, that kind of zone over here. And then I would say that's probably a good chance. Look, we could find some resistance just because there are kind of little zones through here. But I think if once you're getting up over here, you may as well just close the gap and then sort of sell down. So I think this, where's the little, will be the level that I'm kind of looking for. Let's put this back onto the proper color, just orange. That's kind of the direction that I'm sort of looking for. So to close that gap and potentially sort of, let's put it where it may more likely come, something like this. And sort of have that as a little bit of a confluence of closing that gap with the top side of that sort of falling resistance sort of coming down through here. Well, there we go. Excuse me. Turn around Tuesday. We could see this sort of obviously sort of pull back a little bit more. It is a little bit overbought. This is on the 4 hour. It does look like it may want to sort of calm down and cool off a little bit. I think over the next sort of hour and a bit, we may sort of get a little bit more of an idea once we get a bit more sort of volume in. It's I try to do these things a little bit later in the session, just so we can actually see some sort of some volume. It's not just the recap of overnight, but we can see how the actual session itself is developing. So we'll see how this sort of plays out, but I think there's still some medium-term upside for US dollar. Should you break out of this point over here, like that's planning ahead, well, then you're really targeting 99.4. And that's, as I said, this was the big level because that was that weekly flip that we were looking for a week or so ago, or 2 weeks ago, or whenever it was, and obviously started that big last little smash down over here. But if you get back up over here, that's now your swing point of this channel. It's the weekly flip of obviously like it was previously. Um, and I think sort of that's where you actually see a bigger sort of squeeze 99.4. But, you know, that's still a way off. We're still at 97.3 right now. So there's work to be done, levels to be hit before we get there. But just to keep in the back of the mind, that's where the market goes, okay, hold on, wait, we're done with the bottom levels here. And we're going to go a little bit higher and push that much higher on US dollar. Possibly that we could see that something through summer. We'll see it. We'll see how that one goes. Move on. We got gold. Gold, as I said, sort of it was coming down beautifully yesterday. Broke this little sort of rising kind of support that it was playing with. Came out the bottom of the of this little box that we sort of put there on the weekend, and whoop, straight back up. And as I said, I think this is more an idea of the tariffs were potentially the deadline. You know, we've seen before, like the big driver on gold through this whole period here, like the insane period through here, the big driver there was tariffs. Tariffs coming, boom, 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 and we absolutely went through the roof. You know, it's still residual, lower high. We moved into war. And obviously we covered war, traded war beautifully because it didn't react to it at all. It smashed down into it. But as you can see, it's very sort of in the middle at the moment. It's just really sort of sideways chop with it all. We are finding resistance on this level that we had sort of marked out previously. That's fine. I think as long as it's on the bottom side of 40s, 45 for the moment, I think it's okay. Above 45, you're looking at 60s. Above 60 or 65, call it thing, to take out these wicks. Then you can say, okay, this is just the falling resistance, retest, lower, and then it moves up over the top over here. So that's your trigger going high, 33.60. But I think sort of for the time being, you can still see that this thing's dribbling down a little bit. And with the idea that maybe if that was the driver, the idea that, March 9, which is tomorrow, deadline for the tariffs, that drove it up back up here because we got down underneath 33. We got to 32.96, drove up $50. And if that sort of go, oh, hold on, wait, actually, it's not coming tomorrow, it's coming in 3 weeks, you can see this thing dribble back down here a little bit. So alerts will be set back down underneath here again, underneath 33.20. Yeah. And then we sort of play with this kind of area down over here between sort of 33. So I'm surprised it didn't get a little bit deeper actually, but I suppose you could say that that's respecting the top side of this move here. But still, I think sort of while it's sub 66, I think it's still in sell mode, at least dribble down over here. And so I want to see sort of a touch, I want to see a test of and see what's happening should it get down to this 3280s level. That's where I'm kind of interested. And as I said, I think if they do decide to run US dollar, that'll be the time that the correlation of these two kick back in, and we could actually see some significant downside on gold, back towards that sort of 3100. But till we get that, I think it's just more of this, more or less sideways kind of chop. Moving along, we've got silver. What's that silver doing? I've really sort of lost a bit of interest in this, to be honest. This is such an ugly chart. It's just consolidating the zone, and there's a lot of say this little falling resistance, maybe, no, boom, back test, boom, back test. It's still doing it, but as you can see, every time it moves up, it's still very much sort of finding sellers very quickly with it all as well. So, look, I would be, yeah, look, for me, I'm still sitting on this one. I'm not really doing anything. I'm not looking for anything. I think under 35, that's the trade for me. If I get an opportunity for it, obviously that's a way off. It doesn't look like it's doing. It's consolidating more towards the high of this, um, large consolidation. It's consolidating towards the higher level of this consolidation period, but this is very much just boring sideways chop to me. Above sort of 3760 maybe, but again you've got the top side of that sort of big triangle coming up there, which I think is going to limit any potential upside moves. So I think I just don't see this thing exploding and going up to 40. I know there's a lot of people that are like loving, and look, in theory, moving up, consolidating the highs. Well, it's about to blow up to the top. Yes, it could be, but it could also be distribution. That's the thing. It's sort of consolidation at the highs doesn't always mean they're all sort of just buy up. Certainly down here, the buy ups were very strong, and we've seen it flow on from that. I mean, from here, mid 35s, touch over 37. It's not a big explosion. It's a buck and a bit. It's not too bad. Like, it's nothing to scoff at, 100%. But, you know what I mean? Not compared to some of these kind of moves that we saw moving up here as well. So, to me, I'm still in the idea that this could just be a distribution around these 14-year highs, and we could see it be a move down over here. And for me, confirmation of that is going to be underneath 35. So, for the time being, it's a 36.7. Back burner for me for now. Copper sort of came back down here. It's taken out this low, not super convincingly though. As you can see, a couple of moves. Whoops. It hasn't sort of really committed to this downside here. And so this is what I was saying. Underneath 49.5, I think we could see a bit more of a confirmation. Again, similar to the Aussie in the sense, but if you look at the pullback here, I mean, this must be about 4 or 5% or something now. Yeah, 4.2%. 4.2% off the highs, consolidating the lows. A little bit of a sort of push up with this thing here. Again, look, you could see a little bit of a push up sort of through the session. I don't think that's going to be the one to take you over the top here. Copper is very known for doing these things on the angled channels. If fake out and then keeps on, fake out, keeps moving on, these kind of moves. As you can see, broken, closed outside this little channel that was on here, still goes higher. But not so much on the sort of horizontals, I would say. So for me, it's still in that position. It's too high to buy, too strong to short at this point, because there's still a chance that we still flare back up over here to 513 or so. But I think sort of underneath 495, that's a fairly decent little move down to 48. And 48, I wouldn't mind sort of maybe having a stab of the long on the long side. But till you get back down to this 38% mark here, I'm not really interested in buying this one either. And finally, just with China. So China actually got the breakout. So look, it's back up above this little horizontal. We have sort of got a technical breakout, and it's in backtest mode of this falling resistance. That's on the 4 hour, which obviously shows you backtest. There's your daily though. So this is really sort of starting to warm up here a little bit. And this is what I was saying, that sort of it could be one of the more important charts to watch at the moment. And you can see that at the same time that this actually had a big halfway decent push up, Aussie actually had a bit of a push down as well. So there's obviously that sort of correlation there with it all. Above 720, that's where we've got the alert. That's the swing high of this wedge. But at the moment, we've got a small little breakout. And it does look like it's trying to hold this zone here. it's going to be a little bit tough here because it is obviously is that horizontal support, 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 resistance, support, blah, 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 blah. Big tussle over this level here. And we've seen this a few times before where it's like tried to go, bang, pushing back down. You're going to find a little bit of a headwind at 722. That was that sort of base of that larger sort of range that it was in for 3 months. So there's work to be done. But certainly the fact that it's come out of this falling resistance, that's the first time we've actually seen something of somewhat positive action. So obviously back test here at the moment, alerts just above it. Should we sort of get that flip and push up here, targeting 7196, this kind of zone through here, a break through that, I think we'll see that'll open up the door for a move a bit higher, and obviously downside on the Aussie there as well. All right, cool. Pretty quick one today because of course we don't have the news there either. So let's see how we go and see what they do with the RBA. All right, that's it from me.